Hey, what's up guys? Welcome back to another video. Okay, so today I'll be going over inducement. Now, straight to the point, what exactly is inducement in Forex? Now, inducement basically refers to a price movement engineered by institutional traders to lure retail traders into unfavorable positions, creating traps and opportunities for smart money to capture profits. Now, what does all this mean? Inducement is basically a form of liquidity in the market. So obviously, price doesn't just go on a straight line on one single direction. There has to be an expansion, there has to be a retracement, and most times there have to be manipulations in the market. So those responsible for the manipulations are the institutional traders. So the reason they are manipulating the market is because they want the retail traders, meaning traders just like you and I, they want us to fall into traps. So they create traps in the market. So that's what inducement is all just about. Okay, so we have three types of market cycle. We have the bullish trend, we have the bearish trend, and we have the consolidation. Now, the bullish trend is basically when price is going all the way up, when price is going bullish, and the bearish trend is when price is going all the way down, right? And consolidation is when price is just in a single position. Now, if you want to find inducement in the market, you don't use consolidations, you only use trends. You either use a bullish trend or either use a bearish trend. So whenever you get into the market, you have to make sure you are in a trend. If you find out that you are in a consolidation, you don't get into the trade. You only implement the inducement concept either in the bullish trend or in the bearish trend. And again, inducement is basically liquidity, right? So it's just price, trying to manipulate the retail traders. So for inducement on a bullish scenario, we have price, just going all the way up. Then price retraces down a little bit and price goes up and price retraces again down below the last low. Okay, so price breaks this last low, right, before price continues the bullish momentum. So this basically is inducement. So price manipulates the market. So a lot of people might think, this right here is a support level, that this position right here is a support level. So many people will enter on the sell, mainly retail traders. What actually end up happening at the end of the day is that price, we go down below this low, tap out every single buyer who entered at this low, and tap out every single seller who have entered in this support level as well. So it's basically simple. So just like the ICC power of 3, we have the accumulation right here. So this is basically price trying to accumulate. So price is on a bullish momentum. So this right here, all this consolidation right here, all this going up and down is basically accumulation. And this right here is the manipulation. So basically, the institutions deceive retail traders that price is going down when price is actually on a bullish momentum. So a lot of people might think, price is now on a sell, let me get into a sell. But what end up happening at the end of the day is that price reverses back into the bullish direction. And every single person who entered on a sell gets stopped out at this position. So this sudden expansion all the way up is basically our distribution. Okay, so we have the accumulation, we have the manipulation, and we have the distribution. So it's basically simple. Okay, so moving on to the bearish trend. In the bearish scenario, we have price going all the way down, and there's a sudden retracement all the way up. Price goes all the way down, price goes up, and price comes all the way down. Now this basically is the accumulation. And as you can see right here, price created two equal lows right here. So this basically is a liquidity. So you already know that this is a bearish trend, right? So price is going all the way down. Now price try, creating a resistance. So many retail traders think, oh, price has created a strong level. Let me start to buy before price start going all the way up. But what end up happening at the end of the day is that price just retraces a little bit above this high to tap out every single sellers on this high before price continues the bearish momentum. And after price has stopped out the sellers who entered at this area, price again stop out the buyers who have entered at this area. So it's very simple. Now this basically is the manipulation. Okay, so we have our manipulation right here, and this is the distribution. You can see price expands all the way down. So basically, when you are in the market, you don't just expect price to go all the way down. You have to anticipate for manipulation. there could be manipulation at any time, even though you are on a trend. So inducement is basically a trap set by the institutional traders against the retail traders to trap them in every trend, either on a bearish trend or on a bullish trend. It's very simple. Okay, so this is going to be our first example. This is the gold dollar, and we're currently on the daily time frame. As you can see, if we take a look at the bigger perspective, you can see the price has been going all the way up, went down, went up, and is currently in a retracement. So basically, this is a bearish momentum. So if you want to get into this trade, if you want to find a trade setup, you have to look at the market from a bearish perspective. Now, this is what I want us to focus on, this section right here. Okay, so as you can see, price has been coming all the way down, right? And there was a sudden impulse all the way down. Now, this basically is our accumulation. This right here is our accumulation. So as you can see, price retraces all the way down, went up, came down, and went up above the last high. Therefore, tapping out this high, because this high basically is a liquidity. So as you can see, this high, this swing high did not break any structures. So this basically was a liquidity. So price goes above that high, and immediately there was an impulse candle all the way down, tapping out every single buyers who have entered into this position. So there are some retail traders who have entered at this position thinking this was a strong level, and there were some buyers who thought, price is now on a reversal, that price will start to go all the way bullish. But at the end of the day, the institutions tap out every single sellers in this area and tap out every single buyers in this area. Now, if we take a look at the bigger perspective, okay, so you can see price has been coming all the way up. Price from this point went all the way up, came down, went up, came down, went up, and is currently on a bearish momentum. So this basically, all this right here are liquidity. All this basically are liquidity. So price for certain will definitely go below all this low just to tap out every single buyers who have entered at this position. Now let's see what actually ended up happening at the end of the day. Okay, so as you can see, price went all the way down, tapping out every single buyers who have entered on this position. So as you can see, inducement is one of the tricky ways, that institutional traders use to manipulate the retail traders. Imagine you were in this position. Let's just wind back a little bit. Let's wind back from this point right here. Okay, so imagine you were in this position. What would you have thought? Some would have thought that, okay, price will start to go all the way bullish. Some would have thought, okay, let me just use this level right here because this is basically a swing guide, because I know price will keep going all the way down. So why not just enter at this position? But every single seller who entered at this position and every single buyer who entered at this position basically falls in the trap of the institutional traders. So you just have to understand inducement, that it's basically manipulation. It's basically liquidity grab. So first, price creates liquidity and price goes all the way up, tapping out every single sellers at this position. Then price goes all the way down to tap out this liquidity as well. So it's basically simple. Okay, so we've talked about inducement on the bearish scenario. Now let's talk about inducement in the bullish scenario. We are currently still in gold USD. This is the 1-day time frame, and as you can see, price has been coming all the way down. This is a bearish momentum, and suddenly there's a breaking market structure. So this basically is a breaking market structure. So this is the last lower high. As you can see, price went above this lower high, indicating a change in character. So price will start to go all the way bullish. So now you start to anticipate for a bullish momentum. So as you can see, price from this point expand all the way up. Price retraces a little bit, expands up, price comes all the way down. Now this basically is inducement. All this right here is inducement. So why is it inducement? So as you can see, price has been accumulating in this position right here. So from this low up onto this high. So all this is basically accumulation, right? So some might think, what is price doing exactly? Why is price, behaving like this? Maybe price will start to sell. As you can see, this is a bearish impulse move all the way down. So some retail traders might think, oh, price is now on a sell. Let me enter into a sell. So basically, some might enter their position right here and just set, the stop loss right here and aim for a bearish momentum. Why some could just set, their entry above this high and just use this upper high right here. Well, essentially, they're all wrong because price is just trying to accumulate, right? So next we have the manipulation. So this basically is a manipulation. So this is price going all the way down, confusing everybody and making everyone think if price will start to go all the way bearish. But no, that's not the case. as long as you've seen a break in market structure, you have to stand firm. Regardless of the manipulation, regardless of the accumulation, you have to stand firm and acknowledge that price will start to go all the way bullish. So all you have to do is to patiently wait. You can just simply set your position right here. This is a perfect order block, right? So you can just set your position right here and wait for price, to tap into your position. So when price is doing all its thing, accumulating right here, you stay out of the market. All you need to do is just set your position right here. And as you can see, price tapped into the order block. And let's see what actually end up happening at the end of the day. And as you can see, price has tapped every single sellers who have entered in this position right here. And price is now in the distribution phase. So price will start to go all the way bullish. So as you can see, this is a perfect and incredible setup. All you just need to do is to patiently wait for price to come back into this order block right here. You don't have to get into positions in this accumulation area. This is basically price manipulating the market. This is inducement. Now moving on to the lower time frame, this is a 15-minute chart of USD JPY. Now what do you notice right here? As you can see, price was on a bearish momentum. Then there was a sudden impulse all the way up. This happened during Wednesday when Trump, announced the 90-day pause on his tariffs. So basically, there was a strong pressure, for the dollar to rise against the USD JPY. But what price actually did was just to create void. Okay, so this is basically fair value gap. So this is imbalance. So immediately price, goes all the way up. I know price will have to go all the way down just to fill all this imbalance right here. So basically, this is going to be a bearish momentum on the lower time frame. So this is just going to be a scalp trade. Okay, so as you can see, price was coming all the way down, and suddenly right here you can notice something right here. So this basically is accumulation. So all this right here is accumulation. So price is just on a single position, just going up, coming down. There was indecision. So a lot of buyers and sellers were confused whether price will keep going all the way bullish or keep going all the way bearish. So this basically is the accumulation. And after the accumulation, as you can see, price went all the way up, tapping out every single sellers who have entered in this position. So this basically is a manipulation. So this right here is a manipulation. And this we have here is the distribution. All this right here is the distribution. So I know price will come all the way down just to fill all this void right here. So if I was going to set my TP, I would set my TP just right here. So as you can see, there's no way, to enter this position on the 15 minutes time frame. So in this type of scenario, we have to go down to the lower time frame if we can find any perfect trade setup. Okay, now let's go down to the 5 minutes time frame. Okay, so on the 5 minutes time frame, this was actually breaking market structure. Price broke this low and broke this low, and this was the other block responsible for breaking the low. But price didn't retrace all the way up to this other block, so we have to go down to the lower time frame if we can find any breaking market structure. So let's just go down to the 1 minute time frame. Okay, so this is the 1 minute time frame. As you can see, this was our accumulation, and this right here was the manipulation. Okay, and this right here was the distribution. So immediately price did all this. Immediately there was an accumulation. As you can see, price retraces all the way up. So from this point on, immediately price taps this high, price will keep going all the way bearish. So all you just have to do is to look for a break in market structure. Okay, now let's have a closer look if you can find a break in market structure. Okay, so this right here is a high that was basically liquidity. As you can see right here, on the 1 minute time frame, this is basically equal highs. So this high right here and this high right here are basically equal highs, right? So immediately price goes above those highs, price will start to go all the way bearish, right? As you can see, we have this break in market structure right here. So this is a low, and this other block right here was responsible for breaking the low. So this basically is going to be your other block. So this is going to be a sell, and this is going to be your entry, right? And this will be your stop loss. Okay, and you just need to put your TP to the last tip of our void on the 15 minute time frame, which is right here. So as you can see, this is a solid 1 to 24 risk to reward ratio. Just understanding inducement, because this is basically imbalance. So price have to come down to fill this void. So immediately there was an accumulation. It was followed by a manipulation. So from this high, price will continue the bearish momentum. So all you just have to do is to look for a break in market structure. And on the 1 minute time frame, we add our break in market structure. So you get into this trade, set your TP at this level right here, and just patiently wait for price to do its thing. and it's very simple. This is how you can use inducement as a leverage. For many traders, inducement is a trap, but for you, knowing how the banks operate, you can use inducement to your advantage. Okay, so I hope you really find this video helpful. If you have any question at all, you can ask in the comment, or you can just simply reach out to me on WhatsApp, link in the description below. And if you're here to subscribe to the channel, be sure to subscribe. Thanks for watching this video, and see you guys in the next one.